Hello, welcome to another DXY update. We can see that the market so far is following here the micro structure, the micro count. Since the last update, we've seen further declines and indeed that target box has been reached. What did we talk about in the last update? So I've highlighted the importance of the $103.62 level because this is the 100% Fibonacci extension of the initial A wave to the downside. So the idea is that this here could have been wave A of an even larger A wave of white wave 3, triple I. Why are we dealing with 3 waves in wave 3? Well, it is quite simple because wave 1 to the downside was also an ABC structure. So you see, I have decided already a couple of weeks ago, instead of tracking this as an impulse to the downside, to track it as a diagonal pattern. This is basically less clearly bearish. It means we have to be prepared for unexpected twists and turns along the way. It is, however, bearish as long as we are holding below the last swing high at $106.10, which is this B wave top from the 27th of June. We've seen in recent months always slight breaks above resistance, but no invalidations of the bearish setup. But this year was never a clear 5-wave move down. The wave 2 to the upside was a little bit too aggressive to be a reliable wave 2, but it was in 3 waves. Then we had this initial A wave down, which wasn't clearly impulsive. You know, this rally, which was a little bit aggressive. And again, we broke briefly above the resistance area. So it's just all a bit diagonal, like various reasons. I think it goes too far to really dive deep into all of this, but the idea is, yeah, you know, we could have completed wave C of A. It looks like in the coming weeks or so, we should start a B wave rally. And let's update the resistance for that B wave. Again, it's difficult because it is standard resistance only. But if we have wave A down of wave 3, then the B wave would ideally not break above the 78.6 retracement of the initial move down of the ABC structure to the downside, and the resistance area starts at the 38.2 retracement and ends at the 78.6 retracement. This is standard Fibonacci resistance. We normally want a B wave to finish there. I can add a micro path as well, which would be an ABC structure itself. ABC highlighted here in white of circle B, and then we should see a 5-wave move down in wave C, which ideally will be an impulse that would settle it, because then we would move down quite aggressively in wave C of 3. Now, whether all of this ABC is going to be another larger A wave of the 3rd wave will need to be seen. For now, I would suggest we take it level by level. We'll see if the market stays below resistance, which again is between $105.93 and $104.75. I mean, we can go into this area, but we should ideally not break above it. Looking at the 1-hour time frame, it seems as if possibly this A wave to the upside has now started. We might see maybe next week a B wave pullback before the C wave rally starts. And then once we have waves A and B complete, we can even calculate a target for the C wave. So you see, this takes time. This all takes time. Overall, the DXY hasn't really done much since February 2023, just sideways action. But we're looking for setups for further downside. I can tell you that any further downside, as it is here on the chart, will be invalidated with a break above this wave 2 high at $106.50. Already a break above that B wave high at $106.10 will make further downside in this wave count less likely. And already a break above resistance will already increase probabilities for further upside. So it's all about, you know, resistance, then the B wave top, then the wave 2 top. But in the very short term, it's now plausible to expect a bit of a bounce, a corrective bounce primarily. That's the update about the DXY. Hope you enjoyed it. Thank you very much. Have a great start to the week. Please leave a like, subscribe. Bye-bye.